China's real estate market is in ruins. Unfinished homes, low sales, and no investor confidence. That's what this crisis has left the people of China with. Even the top real estate firm, Evergrande, is now sitting at the bottom with $340 billion of debt. What caused this unfortunate predicament? What is China doing to resolve this crisis? Stay till the end to find out. Evergrande's history. Evergrande is at the center of this real estate market crisis. The company was once the top-selling real estate developer in China, yet it has faced immense difficulties in the past 3 years, which culminated in the massive amount of debt it owes today. But we have to understand its success before its downfall. Xu Jian was a former steel factory technician. In 1996, he decided to kickstart Evergrande in the bustling city of Guangzhou. At the same time, China began its massive urbanization movement. As cities swell and property prices skyrocket, so does Xu's fortune. This real estate juggernaut had a simple playbook. Xu would borrow funds to acquire prime land. Then he'd pre-sell homes on that very land before construction even began. Using this cash, he'd pay off lenders and fuel the next project. Starting in the mid-1990s, this strategy was pure gold. This lasted for 2 decades because Chinese property values soared. Xu Jiayin became China's wealthiest man, and Evergrande transformed into an empire. Fast forward to 2009, Evergrande decided to go public. In its initial public offering, it raised a massive $722 million. With newfound resources, Xu expanded into various domains. He even dabbled in sports. He bought Guangzhou Soccer Club in 2010. Furthermore, he spent large amounts on foreign players. Xu even ventured into dairy, grain, oil, and, believe it or not, pig farming. But not everything was running well. Evergrande had some peculiar practices, which caused its eventual downfall. In 2016, the company encouraged employees to invest in financial products. These same financial products were of Evergrande's, and they weren't cheap. Employees would pay up to half their salaries for these. Despite these quirks, Xu had powerful connections in the political realm, and this gave investors and banks the confidence to keep pouring money into the company. For example, regulators would occasionally try to rein in Evergrande, but their grip would loosen soon after. By 2019, Xu Jiayin had ascended to the ranks of the world's wealthiest property developers. But this marked the end of Evergrande's golden years. Early in 2020, Xu publicly pledged to drastically reduce his company's debt, but challenges were looming on the horizon. Beijing implemented harsh regulations to curb developers relying on borrowed money. By 2021, Chinese property sales started to dwindle, and the government started to crack down on developers even more. This triggered a domino effect of defaults among developers, with many sinking. This, of course, affected Evergrande too, resulting in it accruing a staggering $300 billion debt by then. The cash-strapped firm grappled with unpaid suppliers and unfinished homes. And this led to a nosedive in property revenues. Its stock price tanked, shedding 3/4 of its value. Creditors were in panic mode now. To survive, Evergrande began selling off chunks of its corporate empire and apartments. But what was the average person's experience with Evergrande at this point? By now, the once loyal Chinese homebuyers grew wary of the company. Buyers would wait months, even years, for their Evergrande apartments. Some accused the firm of using the pandemic as an excuse for construction delays, yet Evergrande stayed silent. Creditors were uncertain if Evergrande would ever pay the debt. Meanwhile, lawsuits from business partners flooded in. China's property market is no stranger to wild swings. Speculative buying sends prices soaring, forcing local governments to intervene, most often by force. Even so, residential real estate remains a cornerstone of Chinese household wealth. Further into 2021, Evergrande's financial troubles spilled over. It failed to repay retail investors who had poured money into its financial products, and this resulted in protests, which were a national spectacle. Furious investors were swarming the company's Shenzhen offices, demanding their money back. The financial storm continued into 2022. Evergrande announced staggering losses of $81 billion for that year and the previous. It halted the trading of its Hong Kong-listed shares. Xu watched his personal fortune plummet to less than a tenth of its 2019 peak of $36 billion. Evergrande is drowning in debt. Evergrande's problems show how fragile China's economy is. The case of this company is an unprecedented crisis in China's real estate sector, a sector which contributes a whopping quarter to the nation's economy. Anxiety over China's property crisis and its effects on the weakening economy grew, forcing Evergrande to take a drastic step. It filed for U.S. bankruptcy protection, resulting in one of the most colossal debt restructurings globally. This move falls under Chapter 15 of the U.S. Bankruptcy Code, which shields non-U.S. firms from legal action by creditors. This only applies in the case that the creditors are trying to seize the firm's U.S. assets. Beijing, too, is feeling the heat. China attempted to improve its economy by reducing key interest rates. They also considered further cuts. But many experts argue that these measures are too little, too late. The government would have to take desperate actions to stop the economy's downfall. Evergrande's latest move seems to be one step in a lengthy restructuring saga, but its 18-month struggle with creditors may finally end. Evergrande's financial turmoil triggered a domino effect among Chinese property developers. This caused defaults on offshore debt obligations, uncompleted housing projects, and unpaid suppliers. The consequences have echoed across the world's second-largest economy, dampening consumer confidence. Property investment, sales, and new construction starts have been on a downward spiral for over a year. The stock market paints a grim picture for Evergrande. Its shares nosedived by a staggering 87% upon resuming trading on August 28, 2023 for the first time in 17 months. By midday in Hong Kong, the stock went down to a mere 0.35 Hong Kong dollars, totaling Evergrande's market value to $586 million. A stark contrast to its heyday in 2017 when Evergrande's valuation was over $50 billion. Trading had been halted since March 18, 2022, and during this break, the company's market cap plummeted by 99%. Trading only resumed after Evergrande assured regulators that its internal control systems met the strict requirements of the Hong Kong Exchange's listing rules. Evergrande also had a disheartening company filing, where it revealed a staggering loss of 33 billion yuan for the 6 months leading up to June 30th. This monumental loss piles on top of the already large 582 billion yuan in losses accrued over the past 2 years. When you add it all up, Evergrande's net losses for the first half of 2023 swell to a daunting 39.3 billion yuan. The property crisis is affecting everything. This crisis is scaring everyone who is a part of China's financial landscape. They're afraid that the financial system could falter. Such a scenario could have devastating repercussions for China's economy. They're already dealing with many challenges, such a lackluster domestic and foreign demand and a weak manufacturing sector. There's also a troubling rise in unemployment. Nomura projects China's GDP to be growing at a modest 4.6%, which is a downgrade from an earlier estimate of 5.1%. Much of this growth appears to have occurred in the first quarter. This was after the lifting of strict COVID restrictions. But China has set its sights on a 5% growth target for the year. Yet, as more economists chime in, there's a growing sentiment of caution. China may struggle to reach this goal unless Beijing introduces more support measures. To restore shaken investor confidence, China's securities regulator unveiled a set of measures. These aimed at reinvigorating the stock market. They include reducing trading costs and providing support for share buybacks. But the response from Beijing so far has left financial markets underwhelmed. Some analysts wonder if policymakers are treading cautiously because they might want to avoid making the debt burden worse, which earlier massive stimulus efforts caused in the first place. Will the government bail them out? China's central bank is committed to adjusting and optimizing property policies. The mess in the property sector continues to make it worse for everyone. Since mid-2021, companies responsible for 40% of Chinese home sales have experienced defaults. Most of these firms were private property developers. Longfor Group is the second largest private developer in China. It has announced plans to enhance profitability. This was a result of shifting supply and demand dynamics. It reported a modest 0.6% increase in its profits for the first half of 2023. The company aims to achieve positive cash flows for the rest of the year. At the same time, it'll avoid interest-bearing debt. People compare China's property sector challenges to a black hole. It's been pulling developers into the vortex nonstop. And the Evergrande crisis back in 2021 was what started it all. The yuan has fallen thanks to this as a result. But the central government has introduced measures to help this. The government reduced the smallest down payment needed for a mortgage. They made it as low as 20% for first-time buyers. It was 30 to 40% before. They also cut the interest rate on mortgages by a massive 40%. Furthermore, they've cut the minimum amount of foreign currency that banks hold from 6% down to 4%, allowing them to use the extra 2% of dollars and euros for lending and exchanging, which should help the yuan become stronger. These policies have been helping. Evergrande saw its shares surge by a staggering 82% on the 7th of September 2023. A major developer barely avoided a default. This was Country Garden, and it's thanks to this that we're seeing a surge. The company managed to make a payment of $22.5 million in bond coupons. Their payment was due much earlier, but Country Garden settled them mere hours before the 30-day grace period expired. These developments show an ongoing commitment to bolstering the property market. It could even ease some of the financial stress facing developers. The stock surge is impressive, but it represents a volatile response to ongoing uncertainties in the property sector. But with these policies, China may be able to fend off the growing pains of the real estate market. Capital Economics acknowledged the strain on the financial sector, but they said that a catastrophic crisis is not the most likely scenario. Do you think China will succeed in recovering from this economic crisis? And will they maintain their status as the world's second strongest economy? Share your thoughts in the comments below, and be sure to watch the next video.